morning, everyone. Thank you for joining the Cooperative Credit Union Association's Webinar Wednesday series. Our presenter today is Mark White, and he is on the front lines of one of the financial services most consequential shifts, transforming your credit union into modern fintechs. As Director of Product Account Openings at Clutch, he leads a multi-team organization building on the digital account origination experiences that help credit unions grow memberships, deepen wallet share, and compete in a world that demands seamless instant banking. With 15 plus years driving transformation across Accenture, Fiserv, and Blend, and a track record for scaling platforms, Mark brings both the blueprint and the builder's mindset to reimagining the future of member finance. Mark, welcome, and the floor is yours.
Thank you very much. Yeah, it's a pleasure to speak with you all day. We certainly gave you a mouthful of an introduction, so I appreciate that. But yeah, we'll for probably the next 45 minutes or so, uh, I want to kind of take everybody through this notion of why the landscape is changing, why it's changing so dramatically, so quickly, and just some thoughts and ideas about what we can do about it. So the goal is you leave today with a couple of tangible things you can take back to your individual credit unions when you think about engaging with your members online, in person, through the rise of AI-based and agentic tools, the kinds of things that we're seeing happen from a technology perspective, being on kind of the bleeding edge of where specifically AI and agentic tools are starting to be developed and be leveraged. And the gap between what we're seeing fintechs who are sprinting at this problem being able to achieve in fairly short order, and what the majority of the rest of the market is still trying to do, deploying tools like Copilot and finding ways to just ask questions and get better answers. And so, for those of you who don't know Clutch, our platform processes billions in applications annually, and we continue to try to improve the platform with every interaction. We as an organization are trying to continuously learn, adapt, and help credit unions stay ahead of those rising member expectations with fintech-like technologies that sit at both the front end, the digital front end, as well as the tools that support all of your staff in originating products from deposits to loans to business accounts across the organization. We've had the distinct honor and pleasure of being able to support over 160 different partners from a lending perspective, and over 70 partners with a modern digital experience from a deposit account opening perspective. So, as we get into kind of the meat of the discussion today, I want to kind of start with a story. So, we'll use this member in this story to kind of frame the rest of the discussion. But let's just, for the sake of the example, pretend it's 9:47 on a Tuesday night, and you've got a member of your credit union. We'll call her Maya. Just put her toddler to bed. She's standing there at the kitchen counter and wants to open a college savings account for her daughter to start saving that money. And she's been a member for, let's say, roughly like 11 years. So she's going to pick up her phone and comes to you first, right? She opens up, hopefully, the online application, and then it immediately asks her for her driver's license. So she has to put the phone down, go find her purse, figure out how to get her driver's license out of it. Then it asks her for the routing number of the bank she wants to move her money from, and she has no idea what that is off the top of her head. Then it asks her for a document she doesn't have on her phone. Or worse, she lands on your website and sees this, right? Woof. So what does Maya do? She opens a different app, something she's never heard of 2 years ago, and 4 minutes later, her account's open, it's funded, it's done. It's the same person with the same intent on the same night. And she didn't go to that alternative institution and open her account there because she stopped valuing the relationship, or that you as a credit union have been uh, helpful for and productive for and a good guide for. She left because having to navigate through that process, submitting her application and then waiting a couple of days to get a yes, doesn't feel like a relationship. And so, what the kind of core concept that we're going to chat about is this idea that I think we've been confusing relationship and the quality of a relationship with our member with waiting for a human to be available or having a human be available or trying to push the member to a human in order to drive that interaction. And those are not the same thing, right? And I think the other part of the story, kind of what's happening, the undercurrent of it is from Maya's perspective, she just found the type of product she was looking for and a simple mechanism for getting it originated. The reality is the fintechs and kind of neobanks that are out there looking for these members, the Wealthfronts of the world, for example, they cannot compete with you on rate, but you will get chased down in a race for speed and delight. And that's exactly what happened in this example with Maya. Uh, and so, how these tools are being leveraged and how they're trying to position themselves in front of your members is already happening. So, a couple of months ago, I don't know if you may have seen this, there was this Q1 earnings report from Customers Bank. They're a $26 billion bank in Pennsylvania. And the CEO got onto the Q1 earnings call and very routine, was just going through, performance of the bank, where they were making investments, what was happening from a strategic perspective. And then about 30 minutes in, he stopped and told the analyst that the voice that they had been listening to and interacting with was actually not his at all. They'd been talking to an AI clone for the entirety of the investor presentation to that point. Now, the stunt, right, is not really the point, but what came after was. And then for the rest of their presentation, Customers Bank announced that they were launching a multi-year partnership with OpenAI to embed their own engineers, OpenAI's engineers, inside of Customer Bank's operations to rebuild lending, onboarding, deposits, and payments around AI agents that would do the work end to end. Right? They weren't announcing the partnership as like, hey, this is the start of work we want to do. It was, we're already starting to do this, and we're now bringing in reinforcements to accelerate the work that we know we want to do. And I think one of the key takeaways from that message was summed up in one sentence that the CEO shared with us there, which was when you have an autonomous agent, you're essentially creating a digital worker and they can work around the clock. A lot of us have heard that concept of creating a digital worker and get worried about it, right? Is that digital worker going to be able to deliver the same quality of interaction, with a member? Are they going to say something silly? Are they going to get completely lost and leave the member with a terrible experience that makes them never want to call us or interact with us again? And I'll share some examples of kind of what we're seeing in the market and even some of the tools that we're working with our partners to leverage in this space, even around areas like collections. But here's the distinction that I want you all to carry for kind of the rest of our talk, right? When we look at how to leverage or how we might leverage these AI-based tools within our credit unions, there's kind of two different main modes of deploying AI within the credit union. The first is you can deploy it as an assistant, right? Something that helps your teams work faster. It was kind of the first use case for many of us when we started interacting with ChatGPT or Claude or any of the major models now, Microsoft Cowork, right? Things like that. It can draft an email, it'll summarize a call, but at the end of the day, the team is still doing the work. AI is just making them somewhat more productive at it. And what we've seen for the most part is this is what almost every credit union that I talk to is currently buying. They're looking to use AI as an assistant within their existing process and making their people marginally more productive at the outcome. The alternative is starting to think about how we leverage AI as a workforce, right? Something that actually does the work itself end to end at a scale and a tempo that your teams, despite their best efforts, are just never going to be able to match. But the one thing that it does allow you to do is free your people to do the things that only people can do, because there is still a body of work that people are best served to completing, right? That's what Customer Bank is trying to figure out. That's what the fintechs are running at. And that is not the same race, right? Trying to figure out how to make assistants more effective versus deploying a true digital workforce are very, very different bodies of work with very, very different implications. And the reason why the distinction matters, in my mind, a little bit more than it sounds, is at every stage of the member lifecycle, there's a moment where your member does actually need a human who knows them, right? That's the moment where our charter, the credit union charter, lives. and we're able to deliver the outsized service that a bank or a fintech who's operating purely on speed and volume is not going to be able to compete. And I'll use this phrase a couple of times. I'll call it empathy work. Right now, I think the challenge most credit unions are having is your team is too buried in everything that comes before the ability to deliver that empathy moment to actually get to it. And so the examples that we're going to talk about and how we think about the first step in moving towards this world where AI becomes the true worker and enables your teams to reach that empathy moment is how does it clear the path to get there? Handle the volume, the patterns, the routine, the documentation, so that when the empathy moment arrives, your people are there for it. Now, along the way, we're going to talk about examples of how agents like these themselves can perform those small acts of care on the relationship's behalf, right? Like keep the relationship warm, keep the member warm, so that when that empathy moment comes, it still matters. Uh, I think we should not discount the fact that the credit union is the only financial institution in the United States that is actually built around its members, built around the people, and not its shareholders. That's a competitive differentiator for you all, and your ability to create those moments of empathy across your members' lifetime is what makes you unique and distinct and a significant value driver in our financial system. But what's at risk with these tools and the pace at which they're being developed is not whether or not there's unique differentiation in delivering that empathy and being able to support the member and being a member first organization. The question is whether that delivery mechanism is going to be available in, the next 10 years. So let's walk through kind of the member life cycle and look at some different examples of where these types of tools and these concepts can be deployed. And so we'll look at this in kind of five stages. We'll start at your front door, right? Thinking about how new members engage with the organization, how you help those members understand what additional products and additional value and the next best things that might be available to them are, how you take them through the decisioning process, how we manage that transition into servicing and payments, and then ultimately the area we hope things, don't end up in, but they do from time to time when members run into trouble and we do end up in collections. And so the question that I want kind of in the back of your head the whole time as we're navigating through this is one, what are you doing today? And as we think about being able to deploy new technologies into any of these spaces, is what you're buying, whether it's the underlying tools, whether you're working with organizations already that are trying to help you kind of navigate AI and how to deploy it across the organization, is what you're buying here or what you're looking to deploy here an assistant? Or are you actually making meaningful progress towards the deployment of that digital workforce? Because at every stage, if we want to be able to protect that delivery mechanism that credit unions are uniquely positioned to deliver, the answer is going to be the exact same. So let's start at the front door. If we go back to Maya, right, in our original example, she pulled up the application, filled out, something like 23 different fields, uploaded a document, got an email that said, we'll be in touch in 1 to 2 business days. Um, that is not an uncommon experience in 2026, no matter how much we wish it wasn't. I'm working with some of the top three credit unions in the country that are still touching 100% of their account opening applications manually. It's just the reality. So from a member experience perspective, they're getting the equivalent of your check is in the mail, right? We'll get it to you at some point. Somebody on your team is going to have, eyeballs on her ID. They're going to be looking at a checklist that might not have been meaningfully updated since 2019. Good chance it's laminated. Good chance it has a coffee ring on it. But what ultimately happens is when Maya went somewhere else, it wasn't just the loss of that one account in that moment, right? If we play out what this next 6 months to a couple of years for Maya might have looked like, she was getting ready to fund that account with $4,000 from her tax refund and set up an auto transfer of $300 a month, into that college fund over the next decade. That's easily north of $40,000 in deposits, let alone the HELOC she's going to need when her kid hits high school or the auto loan she's going to be looking for when her car unexpectedly breaks down, in the next 6 months. And so the brittleness of that moment is not about losing a member, right? It's about losing the deposit relationship in that moment, the lending relationship that would have followed. And what a lot of folks are trying to leverage today, the pattern recognition piece of a good assistant in that moment is something like this, right? Maya hits submit at 9:47, and a dozen signals fire in the background. Things like device fingerprint data, geolocation data, the velocity at which she was typing data into all of the different fields, whether the funding account she just linked has a high quality transaction history, or whether it's been used in other fraud instances, or whether or not her identity has all the markers that it was synthetically assembled within the last 3 weeks. And all of that data is really, really difficult for a human to hold in their head, right? It's just not a job humans were built to do. And synthetic identity fraud, which is now more than like 80% of new account fraud, is specifically engineered to try to pass that human review. What it's not engineered to do is pass a model that's trained on 10 million prior applications. And so the tools are available, right? The assistant tool is able to synthesize and analyze all of that data and catch the thing that is typically fairly difficult for the human in the organization to catch. Now, that's the analytics side, right? Even at Clutch, we've been helping our partners kind of solve that problem for many, many years now. Most account opening platforms on the market today, even when you look to onboard, will be somewhere on the spectrum with those kinds of analytics tools. The part that most of us haven't started chatting about yet, and what I'll argue is probably the bigger growth deposit lever, is something like a workforce tool, right? One that isn't just analyzing the data and raising flags and helping your people work more effectively and more efficiently. It's actually working the activation of the account, because an open account does not by default mean you have a funded account, and a funded account is not necessarily an active relationship, right? I see all the time this concept of graveyards of accounts that got opened, got funded with the original $5, and then went silent. And today, your staff are in a position where they have to figure out who all those people are, come up with campaign lists and marketing lists, and email them and call them and try to get them to re-engage and interact. The difference maker here in deploying a digital workforce is that you can create meaningful acts of service in those following moments that are a huge driver towards that underlying activation. So if we wind back the clock, and let's say Maya was able to successfully open her account on Tuesday night, let's fast forward to the following Wednesday morning, where an agentic workforce here becomes valuable is Maya getting an automated friendly nudge, right? Hey, welcome. We're excited to have you here. Do you want help moving over your direct deposit? Takes about 2 minutes. And in that text is a hyperlink to help her quickly do that process, right? She taps yes. Great. Now, not only does Maya have a new account open, but she was able to quickly and seamlessly set up her new direct deposit switch. So now her employment funds are coming into your account. That in and of itself is a major driver of continual and regular activity from those accounts, and the likelihood that more are going to come to follow, right? 3 days later, hey, looks like your last paycheck went into your old account. You want me to help you swap that over? Week later, because she opened that college savings account specifically, a reminder that, hey, most members who open this kind of account, they want to set up an automated transfer from their primary checking. Do you want one for 300 bucks a month? Uh, the agent here isn't doing the empathy work itself, right? There's still a moment where a human needs to pick up the phone for a relationship that needs one. But these are like empathy adjacent acts, right? They're small acts of care that are performed on the relationship and on the member's behalf, reminding them that you're there, you care, you're thinking about them, you're trying to put the things front and center for them that are going to be meaningful to them and provide them value. But they also happen to be the highest ROI deposit deepening activities that you have in your institution. And the reason that these things aren't happening today isn't because you don't want to, right? It's that there's just not enough time in the day and not enough people available that can call every new member multiple times in the first month at scale, to try to get them moving forward with these activities, right? But an agent can. So at this stage, because you're enabling a digital workforce, to handle the volume and the routine and these regular kind of touch points to engage your members. It allows the empathy work to go to your humans, right? The high balance new relationship that actually deserves a phone call from a real person, the new business account with a super complex ownership structure, right? Or some of the fraud edge cases, or a member who, was a member for 11 years, ran into some difficult times, had some holds on their accounts and some blocks, and showed up and wants to resolve those and re-engage with the institution, right? The agent can handle the other 90% and keep the rest of those relationships warm enough so that when the empathy moment comes, it still matters, but it allows your folks to really focus where their attention is best served and in the highest leverage places to help drive both the member relationship and the institution forward. So these are some of the types of things that we're thinking about at Clutch is how do we help our partners start to leverage these tools and drive this concept of a digital workforce forward in ways that meaningfully improve the customer experience. I'll give you another example of that. So if we go back to like another vignette, right? Let's pretend Maya's at a car dealership because her car broke down, right? So 6 months later, car broke down, needs a new one, goes into a dealership. Finance manager hands her a tablet. Of course, she wants to finance, through you all. There's a better rate. She trusts you. She's been a member for 11 years. Pulls up your mobile app to start her auto application. Similar experience, right? Fills out her name, her address, her employer, her income, all of this stuff that, quite frankly, you already had most of that data. You've had her address since 2014. You might have sent her a Christmas card, over the holiday season. She uploads two pay stubs, photo of her driver's license, dealership invoice. She might have to actually text the invoice to herself first because the tool won't let her upload a picture, and then she has to email it, right? Terrible, but the reality is it happens. And so now 22 minutes have gone by. They're still sitting in the office. Finance manager is tapping his pen. He's offered her a bottle of water twice. He also, quite helpfully, as she's now starting to feel, has offered her a rate through the captive lender that is higher but competitive. And the friction in that process is going to lead Maya to take it, right? The math on that moment is your loan was priced significantly better, right? You might have won on rate by 250 basis points, but where you lost was on minutes. And not only did you lose the loan, right? You lost the auto pay relationship, you lost the opportunity to sell them gap and warranty insurance, and then you lost the regular touch point you would have had every month with that member as part of the servicing relationship for the next 60 months, right? So like, should we have done the pre-filled application? Should we have done soft pulls, pre-qualified or in real time, been able to deliver steps in real time? Totally, right? Like that's table stakes. That's that digital assistant layer where AI is just helping our people move faster, which is not necessarily the conversation that I want to have, right? The workforce play here is an origination agent that can meaningfully take the obvious loan, the high quality borrower, clear history of income and employment, clear history of quality repayments, and move that loan ready to close without the person, right? So picture this as the other example, right? Maya hit submit on her phone in that finance manager's office, and an autonomous agent goes out and performs an income verification directly from her payroll provider, right? Not upload a pay stub photo, not go get a document, getting the actual underlying data, right? It's able to pull titling and payoff details right from the dealer management system, right? It's going to help run the fraud screen, do the soft credit pull, do your policy checks, run stipulation logic all in parallel, right? Not sequentially the way human does. And I think that's the key distinction here is we tend to still think about the world in a fairly traditionally waterfall type of way. Do this check first. If this check passes, then do this check. If this check passes, then do this one. The agent-based workforce gives us the opportunity to start looking for cost-effective ways to do these things in parallel and buy you back those minutes that matter when she's sitting in the dealer finance office. And so in this context, we're talking to the underlying systems with a focus on capturing the underlying data directly, not how do we get the documents, and putting the file in a position where a human on your team hopefully only ever needs to touch it once at the exception, right, where their judgment is needed, not where everything came back green and there wasn't really a reason for a person to look at the file. That's not a faster version of what we're all doing today. That's a different conceptual operating model. I will make the argument that the path to getting there is not better OCR. It's not better document recognition. It's getting there because we leveraged a digital workforce coordinating work that used to take humans and email and DMs and a bunch of other different communication methods much longer amounts of time just by the nature of how those communication methods work to coordinate. Now, does that mean indirect auto is like the next, play in the next quarter for you all? Maybe not. But this is the kind of conversation that I want you all to have, tomorrow is not how do we add OCR to our application process, right? Competitors answered that question 18 months ago. The workforce question is which loan product in your portfolio would you want to rebuild around a digital workforce that can manage the process from end to end? And just pick one, right? You don't need to think about trying to figure out how to do this for credit cards and unsecured personal loans or indirect auto or direct auto and refinances. Just pick one, right? If it's unsecured personal loans, if that's where your demand is, awesome. Focus there. If it's small business lending and you want to take the fight to regional banks, perfect. Do that. But let's say that Maya makes it through, and now the question that actually matters is why didn't it happen that way, right? Maya was conforming in policy loan, member for 11 years, great FICO, stable job, reasonable LTV. The decision should have been instant. Not instant as like, we'll get back to you today, or not instant as in instant pending, review from an underwriter, but like legitimately instant finance managers still sitting there, tapping his pen instant. And the institutions that are winning here, they're not ignoring model governance, they're not ignoring risk policy, but they are operationalizing it. And they're giving the digital workforce the ability to handle the clearly approvable and the clearly declinable, right? It's 80% of your volume typically is already governed by that written policy, the clearly approvable and the clearly declinable. But where your team's actual judgment can go is to that middle 20% band that actually deserve it, right? That needs some creativity brought to the equation. That might need some education for the member that are brought to the equation. And I think from a lending perspective, one of the things that we tend to overlook or can overlook fairly easily is the no, right? Or the almost is where credit unions can earn relationships or quietly lose a member forever, right? A no from a fintech is like a transaction. A member just moves on. I got a no here. I'm going to go to the next place. But a no from a credit union, when handled well, can actually become a yes 18 months later, right? The service, the education, the guidance that your teams can give that helped Maya know she needed to pay down some cards, steps she could take to help rebuild her score, and remembers that you were the one that gave her that guidance and helped her understand what to fix. That 18 months later, yes, is one of the most underrated loans in your entire portfolio, right? They're high margin, relatively low acquisition cost, and they almost never default because the member worked to get there. They had to earn it. And right now, it's really, really easy to leave that money on the table because staff are too buried supporting the daily routine work to make the phone call that creates that moment, right? So when we think about a digital workforce, we're not here to take those moments away from you, right? I know I'm kind of harping on that concept. It's not about taking the moment away from you. It's about finding ways to give your people the time and the space to focus their attention on those moments and not let the moment when it's on the table drift away and disappear because nobody had the time to get to it, right? That's the true empathy moment, the empathy work. And it's most of the work at this particular stage in the loan decisioning and approval process. Here's a number kind of to sit with for a moment, right? At a typical credit union of your size, uh, the data that we found would say somewhere between 60 and 80% of inbound member service contacts are completely routine, right? They're balance inquiries, address changes, did my deposit clear? How do I order checks? Yeah, people still order checks for some reason. What's my routing number, right? And that question is probably for the fourth time this year from the same member who I assure loves you, but the routing number is in the same place it's always been, right? Now, servicing usually shows up on the expense side of the board deck. So let's try to reframe it for a minute, right? Every one of those routine calls is actually being handled by the same person who would have been making the cross-sell call on a HELOC or getting proactive about a share certificate offer to a member with $80,000 sitting in checking. that could better deploy that capital and would love the guidance, or the welcome call to the new business member that actually turns into a treasury services conversation. You have a sales force, right? They're there in your branches, ready to act. The problem is most of the time they're being used like a help desk. And it's not an intentional conscious decision that you might be making. It's just the nature of how they end up interacting with the majority of your membership. But that's one of the key switches that I think needs to happen is how do we stop using the humans like a help desk to do the routine and use them like the empathetic sales force that we know they can be. And so one of the ways that we've specifically started trying to deploy these technologies early on for some of our partners is how do we enable AI-powered voice or chat agents to help resolve some of the routine stuff much more cleanly, right? That bar is actually very high. These things have to work, right? If members are already used to having to navigate, an IVR maze, press one for English, two for this, press three if you know the right extension, right? If I have to deal with that, chances are they've already hung up. The good news is the technology has evolved so quickly that it's finally there. And the moment a call isn't routine, we have the ability to transition and recognize and then route that to the human with the full context already captured. Now, this is where agentic AI can start to get really, really exciting. The same family of agents, right? The origination and activation agent we talked about that activated Maya's relationship on day three by promoting direct deposit switch, by reminding her to set up her auto pay, by helping her understand, what other types of products might be available, is really going to start to earn its keep. Servicing the accounts here isn't like a one-shot prediction, right? It's 1,000 acts of work, 1,000 small acts of kindness that every day are eating into your team's time. And agents have the ability to do that work. And so what this unblocks for an executive team is two things at once, right? We can start to take the cost out of servicing, but more importantly, we can redeploy the best people there into that empathy work that's been buried in the call queue, into the cross-sell calls, the business member calls, the loan origination calls, and start to transform what have traditionally been very expense-driven activities into things that are purely growth levers for the organization. And so one example that I'll give us all here is in this example of collections. And this is one of the stages that I think is probably one of the most misunderstood of the whole suite, and also one of the most important. So we're going to spend a little bit of time here on this concept. And collection, I know, it's sensitive, so I promise to be, this is the part of the talk where I'll stop making jokes. But the old collections model, right, typically will find the member like at day 60 or day 90, very, very late in the delinquency process. And psychologically, a lot has happened by that point in time, right? The members had to sit with the delinquency. They've probably had other major life events that have happened. There's shame that's probably set in, avoidance for the problem has probably set in. The members stopped opening your letters. They've started letting calls go to voicemail. And the conversation, if you can even get one at all, tends to be adversarial. You're dealing with the embarrassment of the member. And so there's a huge amount of psychological burden that you have to wade your way through in order to navigate the member into something actually productive. This is the exact opposite of what I think the relationship should be, and I think what we as the credit union segment can deliver. And ironically, it's also one of the most expensive ways to run a collections operation. Late stage delinquency cures at like a fraction of the rate of early stage intervention. If you get it to the point where a charge off is at like 90 plus days, most of those are already lost. The economics of waiting are terrible, and traditionally they always have been. But here's what AI changes, and this is where I think AI does the most good for the most members, and incidentally can become one of your largest credit loss reduction opportunities across the entire operation, right? So the analytics side, the assistant side, is some of the basic stuff, right? The predictive models that can flag income disruption moments or payment pattern changes that might be happening before delinquency. But where things get cool here is being able to do the right channel outreach to the right member where they actually respond. Phone, text, email, and being able to leverage all of those communication channels seamlessly in order to help move the member forward, and then provide self-serve workout options that give the member a way to act on that hard situation without having to call and feel judged by it. And so you're enabling the member to raise their hand on their terms, and the agent has the opportunity to meet them there. So both of those things working together quietly and without drama are actually having meaningful impact on resolving these types of delinquencies before they even hit the traditional human collector's queue. And so this is where that framework we've been talking about all morning, I think, does some of its most important work from those small acts of kindness and the empathy standpoint on behalf of the members who need it most. I'll play you all a quick snippet of one of these calls, but this is something we have in market with a number of partners today that's making, I think as of last week, we've hit a couple of million calls across the partners that are currently leveraging this. And her name is Emma, and all she's doing is reaching out to members, helping them understand where they're at, what the situation is, and helping coach them through how to get through that situation. What's getting really, really interesting is some of these conversations are evolving beyond just pure, hey, you have a delinquency, has something happened? Can we help you? How can I help you resolve this today? Kinds of conversations into multilingual support. So calling a member, having them respond in a different language than Emma started the conversation in. So if she starts in English and they respond in Spanish, she'll pick that up and then can swap to speaking in Spanish for the rest of that conversation for the member. But also being able to deliver legitimate empathy. We have examples of calls where Emma started engaging with the member, and they shared that one of their family members had recently passed, and the agent took a moment to acknowledge how hard that must have been, the pain that they must be feeling, and wanted to give them an opportunity to grieve a little bit uh, in the call before getting to let's try to also kind of help resolve this so that it doesn't continue to nag and become a problem for you later when you don't need it to be. So there's wild things that are starting to happen in this space. But I'll give you all a chance to kind of listen and see an example here of what one of these looks like.
I'm calling about your auto loan for the 2018 Chevrolet Silverado 1500. I've noticed that your payment of $707 is currently 1 day overdue. Are you aware of that?
Yes,
I understand that financial challenges can come up unexpectedly. Would you feel comfortable sharing what's made it difficult to make the payment recently?
financial challenges.
I completely understand, and I'm here to help. Are you able to make the full past due payment of $707 today, or would you like to discuss a payment plan?
No,
That's okay. We can explore a payment plan to help you catch up. Would you be able to make a partial payment soon, or do you have a specific plan in mind?
soon.
If you're unsure, we can work together to find a solution. Would you be able to make a partial payment within the next few days?
Yes,
Great. How much would you be able to pay, and when would you like to make that payment?
25th. I pay the full amount.
Let me check the date for you.
Cool.
Thank
We'll go
you.
ahead and stop it there. So it gives you the idea, right? Like this is a call that traditionally person would have had to have taken. And even in this example, it's 1 day past due. And you can already tell you're met with a little bit of, I don't want to deal with this, a little bit of defensiveness from the person on the other end. And even as one of your member service reps, that's a hard thing to get past and to have to deal with, right? To call somebody and know they don't want to talk to you, they don't want to hear from you, they're at a difficult moment in their lives, and your call is likely going to make them just feel like things are getting even more difficult. It's hard for me as a person to psychologically navigate my way through that, let alone be able to be productive for the person on the other end of the phone that I'm talking to. And Emma doesn't really have that challenge, right? She's not worried about judgment. She's not worried about whether the person on the other end of the call is, going to hate her forever because she's there trying to collect an auto loan payment. These things happen. They're regular situations, and she's just there to try to help figure out how to get them back to where they need to be. And so, what we're starting to see in these deployments is the impact is actually very wild, right? She's had the impact of increasing headcount like 2 to 3 times in the collections departments that we've been working with, whether that's pure in outreach or actually the amount of literal dollars that are being cured by staff because she's focused on doing the routine. She's handling the regular conversations and giving the people the opportunity to engage members where they really need the support, need some additional creativity, need some additional guidance. And it's having very, very cool and very, very outsized impacts for our members. And across the board, across kind of that full technology stack, we're focused on trying to deliver those types of outcomes for our partners, right? Whether that's taking account opening processes from 45 minutes to a few in branch, whether that's going from old legacy technologies to a modern experience, whether that's, 2xing your deposit growth or trying to go from manually touching every file to, not touching over 80% of them. We're very, very focused on trying to keep our partners at the front lines of these technology advances as they're happening. So the customer banks that are out there, pulling the stunts with their AI clone of their CEO, giving your folks the ability to deliver the same high quality interactions and the same high quality moments of service and empathy to your members that they're spending millions and millions of dollars on by hiring OpenAI engineers and bringing those types of capabilities and those tool sets to your staff and giving them the ability to deliver the same high quality interaction, right? So if we think about kind of what happened across those 5 stages, at every single one of them, there were kind of two questions hiding inside the work. How fast does the thing need to happen? And how much does the thing need to feel like a person, right? The old model would have given you the same answer to both. It was one person probably doing both jobs, having a hard time doing both well. The new way of thinking about this is not one tool, it's two, right? The analytics side of predictive AI, watching the patterns, serving your people, helping the people when they need to be a little more efficient, be a little more efficient, but focusing on the development and the deployment of the digital workforce that's actually going to handle the routine, that's going to handle the majority of the regular work, operating together at each of those stages throughout the whole life cycle. But that's the kind of harder of the two things that I want to leave you with. That second piece, the agentic AI doing the work, is not just a productivity tool. That's the one thing I want you to leave with is breaking this mindset of is AI a productivity tool? Its true value is going to be in how you can start to think about it and leverage it as a legitimate, independent workforce. Right. The bank I told you about is not the only one, making that bet. They're just an example of a loud one, but there's quieter ones. There are fintechs who don't have earnings calls because they don't need to convince anyone of anything. They're just looking to take members one Tuesday night at a time. Right. Now, I spent the last like 20 minutes kind of telling you in fairly direct terms that that last model that we've operated for the last, 20 to 50 years is starting to break. And I know what it's like to, sit in a virtual room and have a schmo tell you that there's a hammer for all those nails that you've been holding. So I guess let me try to kind of frame it this way, right? The reason any of this kind of stuff matters, at least for me, and the reason why I'm here at all, is I believe really, really strongly that the credit union promise is the only version of financial services in this country that was ever built around the member instead of the shareholder, right? That mission is really, really important. And I said this at the very beginning, and I want to reiterate it here. I think that provides an incredibly unique differentiator that folks don't often take enough advantage of. Right? The bank with the AI clone is not going to be able to outcompete you on that mission. They literally can't. But what they will do is try to outcompete you on the delivery mechanism of that mission, right? And so what's going to separate the winners in this race are those who figure out how to leverage those technologies to create those moments of empathy, right? All the things your people don't have the capacity to do today. Welcome calls to indirect members, personal financial advice, credit advisory services. These were all jobs that were really, really expensive to staff previously and are becoming the new normal for expectations. The homework is walk back into your institution next week and just try to pick, one stage, not five, just one. One of those stages that we talked about, the one where your members are leaking the loudest or are being the loudest right now. Could be your account opening abandon rate, could be your call center hold times, could be your 60-day delinquency cures, right? Go to that stage and ask two questions. What's an agent that I can put in place here, or a digital component of digital workforce I can put here to clear regular work out of the way? And where does the empathy moment live? Right? That decision, I think, made at one stage is how we start to make change, right? It's not press releases and partnership announcements. It's not, trying to figure out how to dramatically alter our workforce. Just pick one stage and one moment and figure out where does that empathy moment live and what's the routine work that we can start to offload from the people in order to make that empathy moment available.
How do you protect PII when using the AI agent?
Yeah, so a lot goes into kind of the model governance definitions of the agents themselves. And so both the types of questions that it asks, how it receives and retrieves information, how we store that information and encrypt, the data, the recordings, how it's used. We've got reams of kind of documentation on kind of how we've put our own governance model together around that to give our partners who are using this, comfort around the protection of that data. And then we also typically have taken like rather than saying I'm going to go to ChatGPT and just start firing stuff into the ChatGPT cloud. We've taken an approach of actually taking models and moving them into isolation. So all of the interaction and the data that's getting stored is never actually leaving our own native ecosystem. And so we also were able to help protect it in that way by not allowing the PAI to end up, in public locations.
So if someone was looking to implement this tool, how is the pricing structured? Is it based on the product that you're using it for, number of members, the volume that comes through? Um, I know it'll
Yeah.
be different for each.
It will, yeah. So typically the way we work with our partners is we always want to try to find the right pricing strategy that will deliver you the best value, right? So we're relatively flexible when it comes to a transactional approach, right? More like success-based pricing. If you're interested in kind of the variability of OpEx pricing over time, a number of our partners are interested in just a fixed license fee, right? They want to pay one fixed cost, they want to know what it is, and they want to be able to write it off and write it down over time as appropriate. So we'll really work with our partners to find the right financial structure for them, regardless of what the product is, right? Whether it's some of the agents that we're talking about here, or it's a more traditional technology platform play for new account originations, application intake, or lending originations.
Another question. So what is the smallest asset size credit union that you're working with right now? So are you able to scale down to assist the small asset size credit unions?
Yeah, absolutely. So, I mean, I mentioned earlier there was, about 160 different partners from a lending perspective, and another 70 plus in deposit accounts. And so we've got partners in our portfolio that are, 20 billion plus, and we have partners that are 150 million and below. So we've been able to effectively work really with the full gamut of the market.
Is there and maybe I missed this, a texting piece that goes with this? So I know Emma does the outbound calling for collections. Is there a text piece that goes with the collections that can be utilized or?
Yeah, those are the types of things that we're evolving right now. So from Emma's perspective, her primary function is to make the voice call because we're really looking to try to get to the promise to repay and the movement, the activity of the repayment. Some of the other areas that we're thinking about, like I mentioned, the origination agent up front, which is something we're kind of actively in the process of building right now, uh, is much more of a text-based interaction.
Okay.
So think of like a member who comes in to apply for a new account. They may find themselves in manual review for any number of reasons, right? But that manual review might be surmountable by uploading a copy of your driver's license and maybe taking a selfie. And then we'll do a bunch of automated evaluation of those data sources. Typically, if a member doesn't do that in the moment, they drop off and they're gone, right? They're often not coming back to do that again. So one of the early use cases is even during the origination process, being able to proactively reach out to them again and say, hey, here's a link to a place where you can scan your driver's license and take a selfie and have your account opened, and then you'll be able to start using it. And so doing that outreach proactively is one of the things we're looking to drive in terms of text communication.
Is there an interface with most core platforms to store collections, notes, etc.?
Yeah, so like the data that comes from the calls, the transcripts that come from the calls, we make all of that data available.
If anyone has any questions, they didn't capture Mark's contact information and you'd like to speak with him, connect with me. I will put you in touch with the appropriate person. And I hope you enjoy the rest of your day. Thank you, everyone.
Thank you very much. Take care.